What's going on, guys, and welcome back to another video. So today we're going to do my weekly Trading212 Portfolio update, and we're going to look through my overall account profit and loss. We'll then have a look through each of my 31 stocks/ETFs, and finally we'll discuss my plans for next week's investing. And with all that being said, let's dive right on over to Trading212. As we can see on the left here, our current overall portfolio balance is sitting at €8,668. We're up 1,268 or 17%. Now, for my American viewers, that equates to about, if I just check the rates on my phone, about 10,317 USD. And for the people in the UK, that equates to about £7,500. So just a very brief overview of this trading account. Now, my overall goal is to get to €100,000 invested. So we're quite a bit off that at the moment, but we're about 8.6% of the way there or so. And I have 31 stocks/ETFs at the moment. Now there's two main reasons why I hold so many stocks/ETFs. Firstly is for diversification. We'll see later on in the video, I have stocks within all different sectors. Again, that's kind of to help protection against ignorance, I guess. And the second reason is the dollar cost average. Now, if you've seen any of my prior videos, that's the main premise of investing I do here. I tend to kind of have a good few companies, so I'd always have an opportunity to dollar cost average into some of the stocks. For example, we see today that about 29 or so of the 31 are currently in the green. So the other 2 or 3 stocks that I have in the red, I usually kind of tip away at those, effectively trying to get them back into the green by buying more, effectively giving me a cheaper overall cost. Now this week we invested a further about €200 or so. We can see on the left here, we got a mixture of dividend payments, and I also bought some stocks, dollar cost average. So we bought the likes of the iShares Global Clean Energy ETF. We put €50 in at the start of the week. We also had the likes of Tesla there as well. And we also got a lot of dividend payments also around Monday or Tuesday. Later on in the week then, on the 7th, we got dividend payments on my 2 main ETFs in the Vanguard S&P 500 and the FTSE 100. And then finally, we put another €100 into the same companies that I did at the start of the week in the form of Tesla, HighTide and the iShares Global Clean Energy ETF. Again, the main purpose here is because they're the 3 stocks/ETFs I have that are in the red. So that's giving me a cheaper overall average cost, effectively in the long term, hopefully giving me a bigger profit. Now let's see how all my portfolio pies are performing at the moment. First of all, we have my communication services. We have €640 invested and are up 34%. So I'm quite happy with that. We have 2 holdings here at the moment. Now, predominantly, I would like to have another holding or so here. Overall, I don't want to max out over 5 stocks per pie. So as we only have 2 here at the moment, there is room to add another 1 or 2, maybe even 3. But again, I'd be happy if I could just get 1 more here at the moment. If you have any suggestions, please comment below. But we have Walt Disney here up nearly 50%. I'm very happy with that. And Facebook is currently up 22.6%. In consumer discretionary, we have just under €1,400 invested and are up 4.7%. 3 stocks here. The first of these being Tesla. Now Tesla, even though it's down 2.9% at the moment, I'm quite happy with that, to be honest, because only about 3 weeks ago it was down over 20%. So thankfully, over the last few weeks, I have been tipping away, and that's the best thing about dollar cost averaging. You're getting in at a cheaper cost. So I have been kind of chipping away at that. So effectively, my overall average cost is a lot cheaper than it is or was about 3 weeks ago. So even though it's down 2.9%, still over the next few weeks, I will start tipping away at this again and hopefully get it back into the green. We then have McDonald's up nearly 11% and Nike is up 1.7%. Also, one of the main reasons why I have so many stocks, not because of diversification as well, is due to different sectors reacting differently to different market conditions. So for example, let's just say consumer discretionary, just because we looked at it there. If that's booming at the moment, consumer staples might be lacking. So again, they bounce off each other. So it gives me an opportunity if one is up, just to leave it, keep riding. And then if one is doing poorly, it's a great chance to get into cheaper prices. So overall, it's a kind of win-win in my opinion. We then have consumer staples. We have 3 stocks here. We have €1,280 invested. So it's kind of nice to see a lot of my pies now have over the €1,000 mark in them. So we're up 8%, 3 holdings, Coca-Cola up 10.5%, PepsiCo up 9.3%, and P&G is up 5.5%. We then have my energy pie, €580 invested, up 9.5%. Now we can see the top one here is the iShares Global Clean Energy ETF. I've made many videos, in-depth videos in the past, which I'll link in the description below. It's currently down 8.1%. Now it was down about 20% just like Tesla a few weeks ago. So we are getting this back to parity slowly but surely. But again, because it's down 8% and I do feel long term that clean energy is definitely the way forward, I'm going to just continually buy in at a discount. We then have ExxonMobil and Chevron both doing very well, up between 40 and 64% respectively. We then have my 2 main ETFs that I discussed earlier, where we got dividend payments. We have just under €800 invested and up 21%. Now, as I said in prior videos as well, with my ETFs, I don't want to have them more than 10% of my overall portfolio value. So they're probably at about maybe 8 or 9% at the moment, so I'm happy to leave as is. We have two here. The FTSE 100 is up 16.8%, and the Vanguard S&P 500 is up 22.5%. One of my best performing pies at the moment, surprisingly, is the financial sector. Again, I think this is just due to luck and timing when I bought in. I kind of bought in at the start of the crash. This is probably when I started investing. So we have 1170 euro invested, up 36%. 5 holdings here. And we can see all 5 are doing relatively well. We have Visa up 12.7, MasterCard is up 18, JP Morgan Chase up 61%, so that's probably one of my better performing stocks. We have Bank of America up 65% and Goldman Sachs also up 66%. So overall, I'm very happy here. So unfortunately, or fortunately should I say, because they're all doing so well, there won't be room here for a long time to cost average. So that's the importance again of having a lot of different stocks. Because just because the financial sector is doing very well at the moment doesn't mean, let's say, the energy sector is. So they do bounce off each other, as I said already. So again, I'm happy just to leave as is for now in my financial sector stock. We're up just under 11.5% in my healthcare pie. We have 880 euro invested. Johnson & Johnson up 11. AbbVie is up 25.2 and Pfizer is currently up just over 4%. So overall, my healthcare sector pie, again, I said in a prior video, I'm not really too interested in these stocks. Again, they're very good to have for diversification and also because it's dollar cost average. But overall, I'd be a lot more interested in, let's say, my technology pie that we're going to look at later on in comparison to this healthcare pie. My smaller pies is the industrial sector pie. We have just under 290 euro invested and are up 24.8%. Now, probably the main reason why this is so small is because when I bought it originally, about a day or so after, they kind of shot up in value. So I didn't really get a chance to dollar cost average in, which again, probably isn't a bad thing, I suppose. But 3M is up 21%, Caterpillar's up nearly 50%. I'm very happy and surprised with that, I have to say. And Waste Management is up 20.8%. Very briefly then, the next 3 pies, materials, we have no holdings here at the moment. Again, I have asked in prior videos and people have given me suggestions, so thanks very much for that, on what stocks I should start to put in here. So I will need to start putting stocks into materials and utilities, both sectors I do not have holdings at the moment. We then have my penny stocks, it's down 7.9% in the form of HighTide. Now again, HighTide is the stock I really do believe long term, and because it's a penny stock, it's bound to have a lot of volatility both up and downwards. So there's going to be a lot of bigger investors kind of pump and dump these kind of stocks, effectively buying in and selling out to drop the price and buying back in at a cheaper price. So again, as a smaller investor like myself, I am happy just to keep this company. I have made many videos as well, in-depth videos that I have in my description below of why I believe this is great fundamentals. And if anything, I'm going to be buying more and more of this HighTide stock, especially at current prices. We then have my real estate pie. We have one stock, Realty Income. It's up 11.6%. Again, it's just a 1 here, and we didn't really get a chance to dollar cost average, hence why we only have 65 euro invested. But again, just like utilities and materials, I would like to put another stock into my real estate pie as well. And we then have my technology pie, one I'm fairly interested in. We have 1430 euro invested and are up 26%. All 5 holdings, just like financials, are doing fairly well. We have Microsoft up nearly 24%, Amazon is up 10%, Apple up 20%, Alpha Class A up 55.7%, and IBM is currently up 15.4%. So my plan for the week ahead, I suppose I will still focus on my 3 stocks that are currently in the red dollar cost average, which are Tesla, iShares Global Clean Energy ETF, and HighTide. So I will be focusing on them. Again, I won't be putting a lot of capital in at once. The main thing here for dollar cost averaging is to slowly trickle funds in consistently. So I'm not going to be lumping a lot in. I might just put a further, maybe let's say 30, 40, maybe even 50 euro into each of those next week. But what I do want to start focusing on now as well, and I mentioned in prior videos, is to start making another pie or another brokerage. So I'm just going with DEGIRO, as I said in prior videos. Again, there's probably a few different reasons. Probably the main 2 is for protection. Now, on the very unlikely event that Trading212 did go bust, I'd be only protected up to 20,000 euro. And you can see we're nearly halfway there at the moment. So I don't want to have, let's say, 40,000 in my Trading212 portfolio in a year to come or 2 years to come. And realizing that if it went bust, I'm losing a lot of money. So that's one of the reasons I'm going to DEGIRO as well. DEGIRO protects you up to 100,000 euro. Now again, with every broker and with everything in life, everything has pros and cons. So in my opinion as well, it's no harm to have a separate broker or even 2 or 3 brokers, because each broker will have different pros and different cons. Effectively, having all the brokers will give you a great overall brokerage experience. So that's probably my plan for next week. Firstly, the dollar cost average, and second of all, to start looking into pies on stocks and what I want to invest into in DEGIRO. Now, I don't want to just copy the 31 stocks I have here. I would like to, well, there might be some crossover, but kind of predominantly I want to have new, different stocks. Again, second of all, it'll probably just make this channel a lot more exciting as well to have different stocks. So if you have any suggestions on what stocks you think I should look into for my DeGiro brokerage, please comment below. So that's it for today's video. I just wanted to go through this week's Trading212 Portfolio update. Again, if you found it anywhere interesting, it'd be brilliant if you could smash that like button. And if you're new around here, it'd be much appreciated if you consider subscribing. And most importantly, if you have any questions, comments, queries, or suggestions, please don't hesitate to comment below, and I'll be sure to get back to you as quick as I can. Thanks very much, enjoy your Saturday, and I will see you all in tomorrow's video.